You're watching today's Daily Market Comment at XM.com by Mario Sachikiriakos. I'm Christina Marujos. Investors entered the new trading week in high spirits as a calmer tone in bond markets helped to brighten the mood in other asset classes. Equity markets and gold prices enjoyed a huge rally on Friday and attempted to extend those gains on Monday, fueled by a peculiar retreat in U.S. yields. Even though the latest ISM non-manufacturing survey was strong on every front, bond yields still declined in the aftermath. Yields act as a force of gravity in financial markets since they are essentially the price of money. The lower yields fall, the more attractive, riskier bets like stocks become, and vice versa. This dynamic helps explain why the S&P 500 rose by 1.6% on Friday while the Nasdaq gained 2%. Nonetheless, this is a challenging environment for equities. The resilience in the economic data pulse suggests that the trend in yields remains higher, valuations are still far too expensive, and corporate earnings are shrinking from last year, a combination that spells trouble for stock markets. Over in the commodity complex, gold bounced back with force, rising more than 2% last week. The precious metal took advantage of the pullback in real yields in the US dollar, although it will be tough for this advance to continue for long in a regime where the Fed is expected to stay restrictive for longer. In the FX arena, the dollar fell victim to the decline in yields and the cheerful mood in equity markets. It lost the most ground against the British pound, but while the dollar's retreat was not very dramatic, it was strange considering the encouraging US data on Friday. A week loaded with promising events for traders lies ahead. Central bank decisions will be in the spotlight in Australia, Canada, and Japan. Meanwhile, in the United States, the Fed chief will testify before Congress ahead of the all-important U.S. employment report. The ball will get rolling with the Reserve Bank of Australia early on Tuesday, where markets assign an 80% probability for a quarter-point rate increase. Since it is not fully priced in, a decision to raise rates could briefly boost the Australian dollar, although the currency's overall trajectory will depend on any signals about the terminal rate and any developments in China. This was a Daily Market Comment here at XM.com. Have a great week.